Digital asset products see largest outflows since March, totaling $726 million. Bitcoin ETFs. Ethereum Bitcoin was particularly hard hit by the recent downturn, experiencing outflows totaling $643 million. Last updated September 9th, 2024 at 16:23 GMT3. Author Ruholamin Haqshanas. Author Ruholamin Haqshanas. About author Ruholamin Haqshanas is a contributing crypto writer for Cryptonews. He is a crypto and finance journalist with over 4 years of experience. Ruholamin has been featured in several high-profile crypto author profile share. Copied. Last updated September 9th, 2024 at 16:23 GMT3. Why trust Cryptonews? With over a decade of crypto coverage, Cryptonews delivers authoritative insights you can rely on. Our veteran team of journalists and analysts combines in-depth market knowledge with hands-on testing of blockchain technologies. We maintain strict editorial standards, ensuring factual accuracy and impartial reporting on both established cryptocurrencies and emerging projects. Our longstanding presence in the industry and commitment to quality journalism make Cryptonews a trusted source in the dynamic world of digital assets. Read more about Cryptonews. Digital asset investment products have experienced a significant downturn, with outflows totaling $726 million over the past week. The figure matches the largest recorded outflow, which occurred in March of this year, CoinShares said in a recent report. Per the report, the primary driver behind the negative sentiment was stronger than expected. Macroeconomic data from the previous week, which led to increased speculation of a 25 basis point BP interest rate cut by the U.S. Federal Reserve. Employment data falls short of expectations. However, the market sentiment showed some signs of stabilization later in the week as employment data fell short of expectation. This tempered some fears, leading to a divided outlook on whether the Fed might implement a larger BP rate cut. All eyes are now on the upcoming Consumer Price Index (CPI) inflation report set to be released on Tuesday. If inflation numbers come in lower than expected, a 50% BP rate cut becomes more likely, which could have further implications for the crypto market. The recent outflows were overwhelmingly concentrated in the United States, which accounted for $721 million of the total $726 million. Canada also saw significant outflows, contributing $28 million to the overall figure. In contrast, European markets showed more positive sentiment, with inflows in some regions. Germany led the way in Europe with inflows of $16.3 million, while Switzerland followed with $3.2 million. Bitcoin and Ethereum lead the digital asset outflows leaderboard. Bitcoin was hit particularly hard by the recent downturn, experiencing outflows totaling $643 million. Interestingly, short Bitcoin products saw minor inflows of $3.9 million, indicating that some investors are still hedging against further price drops in the leading cryptocurrency. Ethereum also faced significant losses, with outflows reaching $98 million. Much of this came from the grayscale Ethereum Trust, a major player in the market. Meanwhile, inflows from newly issued Ethereum-based exchange-traded funds, ETFs, have nearly dried up, signaling that investor confidence in Ethereum may be waning, at least for the time being. What's more, VanEck has announced that its Ethereum Futures Exchange Traded Fund ETF will be closed and liquidated, with the final trading day scheduled for September 16, 2024. Amid the widespread outflows, Solana emerged as a rare bright spot in the digital asset market. The cryptocurrency saw the largest inflows of any asset during this period, totaling $6.2 million. Meanwhile, in a recent note, QCP Capital said that the crypto market has seen some stabilization following last week's price swings, though implied volatility remains elevated. It seems the market is still anticipating some volatility heading into this week's events, specifically the Trump v. Harris debate 10 September 9 p.m. ET and CPI 11 September 8:30 a.m. ET, the investment firm wrote. It added that despite last week's sharp dip, market sentiment remains cautious, particularly around the potential downside risk. Risk reversals for both Bitcoin and Ethereum are currently skewed toward puts, reflecting traders' apprehension. Nevertheless, many institutions remain structurally bullish and are taking advantage of the market's recent downturn to place longer-term bullish trades. Notably, there has been significant buying activity for March 28, 2025 call options with strikes at 85K, 100K, and 120K, suggesting that some institutional investors see current price levels as a buying opportunity. Follow us on Google News.